Hey everybody, hope you had a great trading day. A lot of volatility today, lots of ups and downs to say the least, but just a great trading day, and I hope everyone had a good one. We're going to go over about 25 stocks as we usually do. I tried to keep it to 20. There's no way I can keep it to 20 tonight. There's just too many actionable ideas to the upside and downside. We're going to go through these in alphabetical order with actionable ideas and key levels. As always, subscribe to the channel and click the notifications button, because what we're going to go over here is extremely timely, and it's very important that you are notified when we do these pre-market live streams, or on the weekends we do a live stream where we do Q&A. So the only way to be aware of those is through the subscription and notification button. So let's just jump right into it. So first and foremost, Apple. And I can throw the indicators in and we can see how it's been riding the 200-day, and the 21 is pointing up and the 50s right here. But really what you need to focus on is this. You need to focus on what's going on here. See how this is getting tighter and tighter, right? I need to break this level before I get involved with it, but this should be on your radar again. This finally broke through that 127 level that we were just with forever, and we're starting to head higher. Now, this is roughly 20% of the XLK, which is the S&P technology sector. So I would really keep your eye focused on this. I like this a lot for people that are looking at large cap names, but you need to break this level right here, this trend. And then that should get you up until about the 137, 138 range. And then we can see how we go from there. And you're in a trading market right now, so that might be all that we get, but that's still a decent trade. And I would definitely have this on your radar. AMD, a lot of people are trading this one. And, for the people that I talked to today, I'm hoping I was pretty clear that, if semis come down, they're all going to come down. So if semiconductors are going to come in, which they did on Friday, right? And we all know that. Let me just drop this here and pull this up. If they're all going to come in, then this is going to come in with it. And you had a nice rally, but look what transpired today. So you broke out, have a little doji bar here, fail the breakout, open is the high, close is the low. This is not something that you really want to be staying in. I'm just going to give some quick advice here. So when you ever have a bar like this that sets itself up like this, and then you have a little doji here, see the low of this bar, right? 83.48. Do yourself a favor and start making those your stops. So whenever you see a pattern like this, and I'll get rid of it again, and you see a doji like that, start making that little low your stop, just unequivocally. If you did that, you'd save yourself a lot of pain in trying to figure out what's going on, because now this is kind of broken, isn't it? Right now we're below the 200-day. You're second guessing why you didn't sell, why you bought the breakout. Now it's 2.5 points higher. So it just puts you in a bad spot. So just having a simple process like that can save you a little bit of heartache. But I would not be chasing this here. I know people are excited by it. We had zero follow through. I mean, zero follow through on this, right? So, and you can see this level right here. And you could just see how we just rejected. So it rejected just like what? Just like the SOX rejected. If you look at the semiconductor index, it's this exact same pattern. So just keep that in mind. You definitely do not be chasing it. And I definitely would not be adding to it until I am through this level and a close above 85 3/4. So AMEH was one of our top 10 videos from about 3 or 4 weeks ago. I have to go back and take a look. We bought it off of this breakout right here, right? When we went parabolic, I think that's when we looked at it. It's just a monster. I mean, there's really not much more to say. I think, I'm glad to see that people are still in it asking about it, but you're up, what, 40-something% in a week and a half. So look, with a move like that, you just have to keep moving your stop up, right, into a level that you're comfortable. And I really think that if you look at this, that 5270 level is an area that we should be comfortable with and reviewing. And I think that 5270, a close below there or breaking that again might get me concerned. And I would use that as a stop. I would definitely at this point be using this wick and a break of that wick as a stop. That's unequivocal at this point. Really tough one to step in and say, hey, you need to buy this right here. I mean, it's just been an absolute monster, but we should be looking for some kind of pullback soon. So let's see how it plays out, but that's what I would do. I would use this as my stop. Some can argue that you could buy this here, and you can, right? But your volume's completely falling off and you have to use this as your stop. So there's a, almost 3-point stop on something that's up over 20 points. So I don't know that I want to be that person buying that when this is setting up like
Market
that.
data connection.
You get a little more color by throwing in the 8-day and the 5-day, and you can see how it's respecting that 5-day, and you could use that as your close. But overall, I think you just have to take a look at this, and it's not something where I think that you need to run into this up here. I think there's much better ideas out there than this. So let's take a look at some, but it's just been a monster move, and congratulations. So this is one that we have been in from the newsletter. I think around right around here we got in. Right around here, I think it was like 62 3/4. And we've been in ever since. So the stop for us has been that 60 3/4 level, this low, and we never really broke it. So this is actually a little lower to right about here. And so now what you're seeing is the 5 and the 8-day. We're seeing those cross. We're seeing it run right into the 21-day. And we're seeing this bear flag, right? But we're getting through that flag and we're working up. What I liked about today's action, couple things. So let's really zoom in on this and pay attention to it. And this is really what I liked. I liked how I opened here, which is right above where this close was, right? And then I closed right at the 21-day. Okay, that's pretty important stuff. Now, if you look at this and just overlay, bring this down a little bit. Whoops, let's click off of that and bring this down just to here. And I'm really trying to zoom in on what's going on here. And we're going to get rid of these indicators right now. See how you have a wick here and a wick here? And this bar here was concerning on Friday. But why? Because you see how you're in the middle and you have a long leg here and a long leg here. That's called a long-legged doji, and it could give you a sign of uncertainty. And that's exactly what we had there, uncertainty, right? We couldn't break above this level right here, but now we have. So that's why it's important to pay attention to details on charts and kind of zoom in a little bit and get rid of all the noise, and then you can throw your bells and whistles back in. But by clearing this up, look how much cleaner this is for us to understand. And what we really want to focus on now is say, okay, where can this take us to? Well, our first stop is here, right? I mean, this is really our first resistance. If you throw in the indicators, and you can see that, let's get rid of, we don't really need the 50-day right now. That should clean it up a little bit. And I really want to get rid of the 21 for a moment and just focus on this 5-8 crossover. It respects the crossover, and that's why it's important to understand. And I say this a lot. Stocks have personalities. And the personalities that they take on are the people that trade them. So people are looking for certain things when they trade a name. And if you want to trade this name, this 5-8 crossover is just glaringly obvious when you look back at previous moves. And that's no indication of what's going to happen in the future, but it's a guide that you could use, right? To kind of say, oh, hey, maybe I'll stay in there a little bit longer. Maybe this happened and it's holding this level. Maybe I will move the stop up and see if this trade. So you're always analyzing your trades to see if you should stay in them, if you should add to them, if you should take away from them. You're constantly analyzing. So see how you crossed here on the 5-8? And there's a video I have on this. I can link it to the back, but it's just a very simple understanding moving averages. When this 5 crosses the 8 to the upside, we move. We crossed to the downside here. We kind of went down, but not really. Crossed back up, went back up. Crossed here, what happened? Went down. Crossed here, went up. Crossed here, went down. Crossing here, what should happen? We should head up, right? It's not a definitive answer, but it does give us clarity onto what may happen. That's the best way to explain it. Now, I need to get above this 21-day, but we did something very interesting. I finally got a wick above the 21-day. And that happened today. And I'm happy for that. I'd like to see more volume, but I just don't have it. So if you're in this, I would recommend just trying to maybe hang in there a little bit, see how it plays out, and see how we respond to that 70 level, because this could be setting up to really head back. And, the only reason this really went down was the secondary and the pricing. And now that's all done and we're through all that. So, and again, just a reminder, when you see large red like outliers like this, they usually denote a bottom is either in the process or it's at the bottom. And that's exactly what this one denoted. We've never gone back since we've seen this red bar like there. So Disney, I think it's important to kind of pay attention to some of these names that are more large cap right now that are in the industrial space. And we're going to get rid of the 5 and the 8 on this and just go with these 3. And let's just focus on what's going on here. So I am just riding this trend line down. Okay. That's all I've been doing is just riding it down. And there's not really much to say about it except this. I have broken, I've undercut, and now I'm just sitting right here. I should undercut this. If I don't undercut that and then force myself back up through, the move would be weaker because I never really shook out these people. But there's something interesting that's going on here that I want to talk about is, see how our volume is falling off here? Now look at our volume. Look how it's picking up. So I think that this could attempt to get through these levels, and I would watch this. And you have a little trend line right here. I can draw it very quickly so you can see it, but you have a little trend line right here that it may respect. So let's see how this plays out. It's very small. We can get rid of these indicators so you can see it. But bouncing here could lead to finally getting through here. We just need to see more volume on Disney for that to happen. And then that could transpire, but eventually this will bounce. It's just a question of when. And when Disney bounces, it usually has a fairly decent move in it. So I would just keep that in mind. And it's definitely something I would put on the radar, because when these bounce back, when you start hearing of everybody talking about, oh, let's start shorting the Dow, that's the trade. That's no longer the trade, right? And you can see these levels and you can see what we've done since that. But could this continue to go down? Absolutely. So we just need to make sure that it breaks this white line to the upside before we get involved with it. And we can zoom in here and focus on that a little bit more. So FUBU is one that we've been trading in for a while now, and we got in at 26.25. Our stop's 26.75. When the newsletter comes back out, that will obviously be raised. If you want to follow along in the newsletters for free, there is a link in the bio and description, and the free newsletter comes out once a week on Wednesdays, and it's an update to what we're doing. It's a good way to understand what we actually do. So you see this break here? Ever since that break, right? Boom, it broke out. This was earnings. That was earnings. Okay, so after that earnings number, that's it. It's been on ever since. We've never had a major pullback since that earnings. So if you think about that for a minute, then you overlay this. Every bar, right? Let's get rid of these events just to clean this up a little bit. And if you look at this, every bar down here that has broken above this line is green, except for here, this one day, the day after this. And we took in, if you zoom in here, and you look at that, we took in all that selling and it only came down to here, right? And you see what I'm talking about? Green, green, green. Every green bar is what's breaking the above average. The red meaning the sellers, they're going away. We're not selling anymore. So finally what transpires with this, you break out and now you've based. And now that base has happened. And guess what we're doing again? We broke out today, 31.44, and we finally closed at 31.70. We haven't closed at that level since March. So this is setting up to test this 34.79 level right now. This was a clear breakout today. Very clear breakout on above average volume out of this base. And let's see what happens with it. I didn't really, we've seen a lot of failed breakouts, so I didn't really want to go out there today and tell people that they should look at a short-term trade, because we're seeing a lot of these fail. And from where we're in at 26, it really doesn't make sense. I'd rather just keep that trade going and keep moving up the stop. And we'll see how this acts. What I'd like to see this 21 day start pushing. And that's what it should do. The 21 should start pushing. The 200 and the 50 should start pushing this higher. So that's what we're looking for there. I like that trade. Globe was one of the top 10 on that Saturday list. And I'm going to link that video for sure at the end of this, the more I think about it. So the top 10 list that we did, if you look at the stocks in it, we're going to go through a couple of them. Torch was in there. Wish was in there. Globe was in there. There were some real winners in there today. And I'll link that. And I don't think those moves are over. I think that you have to use shorter time frames, but I don't think those moves are over. So I'll link that top 10 video to the back of this one. So this one, when we went through the top 10 video, was a simple trade. 52.90 was the break we were looking for. And we did this through, and we established it through an hourly chart. And let's get rid of this pre and post stuff. And what we did was we drew this level, right? And we could see that we were setting up to break. And it played out perfectly, right? And you can see that. You can see where we're at and how it played out. It just played out absolutely perfectly. And we ran right to this one trend line, right? And it rejected that trend line on the hourly. And now it's curling up, and we're going to try for a second time. I don't see a reason that I would be out of this if I was in it to try to get back in again if it breaks. I would just manage the trade and the risk and maybe sell a little bit and then just manage the position to stay in it till they could trade up. Would I buy this here? Absolutely not. So now I have this doji at the top, and I'm not even halfway up the bar. So these bars, for those that have looked at that candlestick video, this bar, when you see this wick, that's price rejection on either side, and you don't want to be involved with it. But my volume continues to trend up. So from here, if you're in it, stay in it with a 52.90 stop. I like the trade. I still like the trade. So LSPD, so here was your breakout level, 82.50, and we broke out on decent volume. It was a nice breakout. And I think we went over this one last night in the live chat. But what I like about it is it hung in there, and it didn't really falter too much. So yes, would everybody like it to have closed at the highs? Absolutely. It didn't. So what? So watch it. What would be a level that we could think about that we could use if it falters, that we would get out? So if it takes out the low of the day, depending upon what your risk tolerance is, you need to get out of it. You definitely could use also the open on this bar, because this is the breakout bar. And if you take out the open, it means the people that were there that basically bought all day and drove it up, they got out of the way. So it could mean that it could come in less. And that's another stop area that you could use. And it's a little bit of a tighter stop, right? So that would give you a $80, we'll call it $80 versus using the 78, 90 level. So it saves you $1 if you use that as a stop. Something to think about. But definitely have a process in place, because this is the first push up. Usually the first push doesn't last. We have a pullback, and then it's the second one that goes. But I always like playing the first one anyway, because when it goes, sometimes on the first time, the first breakout attempt, if you don't play them, you can miss them. So it just depends on your trading style. MEOH, there was a ton of chatter about this one, and I just want to go over it very, very quickly. I don't see it. I don't get it. And that's really why I have it up here. The 21 is pointing down. The 50 is pointing down. You are rolling. And even if you get up to here, the probability of these catching you and keeping you down is pretty significant. So this is not something that I'm going to recommend that you run into here. I would watch this and I would avoid it. And if it trades back up to here and I was in it, I would be getting out. So that's why I really wanted to cover that one. MSTR just continues to buy Bitcoin, issues bonds, buys Bitcoin. So essentially, you live by the sword, you die by the sword, and that's what's going to happen here. They're either going to do exceptional because Bitcoin does, or they're going to fall apart because Bitcoin does. So that's the trade, and that's the move that Michael Saylor made to decide on the fate of his company, essentially. And you just have to watch these levels, right? So this 566 has not broken yet. And it's right where the 50-day is, and it's major support. If I break 566, there's nothing to stop me till I get to this level, which is 526. And then when you get down here, you have some stop areas, 477. But this could drop 20% fairly easy, like not for no reason. So I'd be very cautious and apprehensive about stating that you need to buy this or get involved with it. I know some people are talking about shorting it. The way you short these names is you short them on huge rips up like this, right? That's when you short up here, when this has just got ridiculous. When we rally again to a support level, filling a gap, that's when you short. Shorting here against a 50-day where people are going to try and defend it and play with you is not where you short it. Or, you know, could you make money? Absolutely. But it's just not the area that you want to be involved in. You know, it's not optimal. So I would watch that. So let's just keep going. Net, I like this space. I like the software space. I would say this about this move, and then I'm going to pull this down now that we know which one we're talking about. These kinds of bars you need to pay attention to. So this bar in and of itself, and let's just talk about this and get really into this. This bar in and of itself is basically called a Dragonfly Bar, and they usually are very positive and mean that we're going to reverse to the upside. What concerns me about it more than anything is that I couldn't even get over the close of this level. So that is somewhat concerning, and it's something that I would pay attention to. I would not ignore the fact that this could not get over that level. I would pay attention to that because I think it's significant. So that said, let's just keep on going with it and taking a look. But see how you're just unable. Now you came down here and you tested this level, and that's nice. And this gave you a chance for a day trade, but you just need to watch where you're closing right now. And this is a real issue. So I would hold off on this. I like the name, but to me, I think we're setting up for I think we're setting up to come in. And if that's the case, we don't want to be there. So just hold off on that. So I do think software is going to continue, and I do think this name continues, but we might come down first. So this is pretty much exhaustive selling in Nvidia. And let's pull this over here for a moment. So, but really in regards to Nvidia, we've just had a monster move. We've been in this for a while. And let's just see what we're doing, right? You're right here. And what's going on, right? Everybody knows this pattern by now. If you've been following me for a while, this is an evening star pattern, and it's one that you really need to pay attention to, right? It's a really important pattern, and it can save you a lot of heartache if you use this as your stop. So that was in the newsletter yesterday. For those that follow the newsletter, how we were here and breaking that, that's why that was my stop. So that for those that wanted a conservative stop, so that when you broke this, if you broke this, you didn't panic sell it down to here, right? So it's also a question of your stops sometimes are put at levels that are going to give you the most control so that you can get back into them, but also so that you don't put yourself in a position where you just ran through a 75-point move and only capture 13 points of it. Right? I mean, that you don't want to be doing that. I mean, that's the last thing that you want to do. So you really want to lock in those gains, right? You just have to be careful with it and figure out how to do that. So to me, that's why that stock was tight, so that we're not having that conversation when we're here and we break going, what do we do now? We could actually argue that we should be looking at a 1-minute chart and day trading it, right? And this is where we could get in now that we're out here. So there's ways to think about it, and there's reasons why stops are set at certain levels. But the one key takeaway I would get through tonight, if I can get one point across to everybody, if you see these patterns like this, and you're seeing more and more of them, right, it means you're getting toppy and that you could see a pullback. When you start having failed breakouts like this, you need to pay attention. But also, and this is the point, when you're trading, no matter where you're trading or what name it is, or if you're trading currencies or oils, whatever, I don't care. Okay. You'll be trading tulips. You see this pattern, this low needs to be your stop. Break below that. That is a conservative stop because you're setting up for an evening star, which should encapsulate this move down. And this one almost was perfect. Right? This almost came all the way back. So just keep that in mind, and I hope that's helpful. What would I do with Nvidia now? Nothing. There's nothing to do with Nvidia right now. It's now a trade. It's showing that it's exhausted, and I would argue that without even looking at the RSI yet, that we're probably already setting up to come in. Yep, you see this? So you see how the RSI is starting to just bump its head at 80, and 80 is a pretty big number for an RSI, just FYI. But See how we're making these bumps and we're not really hitting higher highs and the stock's going higher? That means that we could base for a little bit. So just keep that in mind. It's been a great trade, but it might need a little bit of a rest, and that's okay. So NVDA, the reason I wanted to put this one in here, hold on one second. Let's get rid of all this text. And let's get rid of all this up here because this was all from a move before. And let's get rid of these arrows so that they're not distracting. And this is NVDA. So we're going to pull this one down. And the symbols are up here as well. But I do like putting them out there so that people can see them. But now with this NVDA, what do? I like this trade, and it's one of the reasons why I want to show it. So as I'm sweeping through this, look at what's setting up here, right? Look at this. And I think this is pretty important for people that are interested in this NVDA. Now that's drawn awfully, and now we're going to make it much nicer. Look at what's going on there. Okay. See that? See how we're breaking that level? Look at this bar. So when I was running the charts to see which ones I was going to show tonight, look how we opened here. Look how that's the low. Like, it is respecting that line, and that's very important. And yes, they do respect that line. These trend lines flip from support to resistance. Just remember that. So flipping here, now let's overlay the bells and whistles. I have the 21 that we're respecting. And how do I know we're respecting it? Because we flipped it here, right? And it became support. How do we know? Because we tested support here. Now we're flipping the 50-day. So the probability that the 50-day becomes support is increased because the 21-day was support. Does that make sense? I obviously can't get an answer now. So it's a rhetorical question, but the answer is yes, it should make sense. So now we just want to move up. Well, where's my next real resistance point? Well, I don't really have resistance in this until $38. And then I have this up here too. So I see what you're seeing. I like this. And this is a great example of where you could use other indicators when you're down lower to see if they can add value to the trade and if you should be in the trade. So we're going to get rid of everything else that we just looked at and get rid of these segment lines. And we'll get rid of this horizontal line. And let's just overlay a couple quick indicators and see if they can help us make a more informed decision. So let's just do this one because it's so much easier. Put on the indicators here. Get rid of these moving averages, and you can see the volume, right? And we're having above average volume, but we're going to get rid of that one, and we're going to just use volume by price, and we're going to use RSI. So, and we'll see if these can help us make a decision. So the answer is that we're going to just start with the volume of price. I have some gaps in this, and so when you see these gaps, that kind of alludes to the fact that it might be easier to get through there because we don't have that resistance. You can see the shelf right here, how this jets out, right? And how that's the furthest one out, right? So based upon that, that's our shelf and our support now. And these are getting less as we're going up until we get up to here. And here's where our VWAP is, right around where our 200-day was. And that's the VWAP of the price by volume, and point of control is up here. So it's way out of the way. So that gives us an understanding of, hey, there's some gaps here that we could fill in. Now, this RSI is pretty clear what's going on. There's a positive divergence in this RSI for those that know how to read it. So you see this level right here at 39 and how we're at this level at 50. Look at how we're here at 60. So this is what you call a positive divergence, meaning the stock is lower, but the RSI is higher, and the RSI determines the magnitude of the move. So I understand what you see here, and I like it. What I would argue is that you see this line right here. The fact that you're above that is excellent. That's what you want to see. Staying above that, the fact that you're above those moving averages is excellent. So just keep that in mind when you're putting this trade on. I could see why you would put this trade on, and I would look for the volume and for this to increase. And I would actually use this 31.76 as my tight stop because that's where you're forming your flag. And the fact that you're breaking out of in a 3-bar pattern into this leads me to believe that this is going to push pretty fast. So I like this idea, and it'll be something that I'll be watching. So OCGN was something that I just wanted to cover because I know people are watching it. And they were talking about it. So it was really important to me for them to understand something. So this is not something that I would go and jump into. And there's a couple of reasons for that. So first and foremost, see this level? You have to get above that. Then you have this entire wick right here that you have to get above to the $8. When you get through that, you could fill this gap to 9, right? But I need to get through $8. Until you get through $8, you really can't look at this. I don't need to spend a lot of time on this name, but that point I needed to get across. You need to wait for this to get $8 and get in that gap before you take a look at this and consider getting involved with it. So I hope I'm pretty clear on that, how you're sitting here. OIH is up 6% today. Who would have thunk it, right? So energy was the one that kind of bounced back today a little bit more than what? More than the financials. We were looking for a financial bounce, or let me rephrase that. I was looking for a financial bounce, and I didn't really get that. I got a little move. The real move and the real bounce came in energy. And what we're seeing here is on the XLE, what pattern is this? Well, that's a bullish engulfing bar on the bottom of this channel. Well, we still have to flip above it, but the fact that I have a bullish engulfing bar there is pretty impressive. So you could see follow through. Now, what's interesting about the XLE today is you open at the low and you close at the high. It doesn't get more bullish. It does not get more bullish. And I like the fact that even though we had less volume, we had a greater move than the sell. So these may come back. This sell may be done. So you're going to just have to watch this. If this is something that you want to be in, the very first thing you need to do is get through this 230 level and push through. And your stop, honestly, is the low of this bar. I don't know how much risk you're willing to take, but whoever wants to do this trade, you need to use that 218 3/4 level as your stop. So I understand what you see, and I get it. I mean, I do get it. This did reverse today. And at least find a bottom, and let's see if that can hold in here. And what may happen with this is it might just bottom and base in here for a while before trying and attempting to go again. So you don't have to chase this. It's not something that you're going to miss unless there's a reason for oil and energy to spike. So Plug is coming out with earnings at, I believe, tomorrow morning. Let's take a look at the events. So I don't know why I thought that. I guess they're not. Maybe there's news coming out. I thought for some reason they were coming out with earnings tomorrow, but apparently they are not, and they came out in May. So what you're seeing here is just a sell-off, completely of volume. It's just devoid of any move. So what you're going to look for is this 21-day and see how it's respecting this. And the 50 days here, you're trapped between two averages. Until you break through this 21-day, there's no reason to be touching this. And you have this right above you, this 200-day, which we clearly are respecting. So until that happens, until you have some type of impetus, there's really no reason to play with this. And that was one of the reasons why I wanted to show it. RBLX, I know a lot of people are looking at this, and I understand why you are. And I'm not saying that I think this is over. I think that this could be, significant, and we are setting up for a bottom. And let's just go through why. So you have this very steep trend line right here. So I would say that if you can get above this 83.41 level, that's the level I was looking at all day today. If I can get above that level, that's exactly what we're going to want to see. And that's what we need to focus on, that 83.41 level. So if we can focus on that, we should be in good shape. And I think that we can focus there, and I think we can push higher. But today was not the day for me to buy this for the hope that we're going to push because there's too many failed breakouts. I want to see the actual breakout, which could be tomorrow. And you can see what today's action was like, right? So, I mean, here we are. So you just understand it. You broke out, you rallied, you ran right to that level, which is exactly the same level back here, and you stopped. And we did that, and when we did break on above average volume, but if on a relative basis, if you looked at it from a relative basis, it really wasn't that great a volume. So it wasn't something that I was going, oh boy, we really have to be in there. You can see what I'm talking about. It's not like this. If you saw this, you might act, right? And even that didn't really respond very well, but it kind of put a bottom in, didn't it? Right? So you have this huge volume spike here to buy, and we never really even closed under that level. If you go across here, you never really closed below that. So this is a pretty good indication that that's probably a bottom. The mere fact that you undercut it, bounce through it, and once you get through on the hourly, this 83.41 level, that'll confirm it. So I do like that, and I do understand why people are interested. let's just confirm it out first is how I would look at it. And then I'd get involved. And if I have to pay up for it, I really don't care. At least I have confirmation of the move. So Sava, this is just what we consider a binary event, right? Waiting for news. Frankly, I'm not even sure if the news is out or not yet, but you broke out this 86.92 level. And here you go, boom. And you just broke right out with, I believe it was fairly decent volume today too, right? So yeah, you had a little spike there. Let's see if this relative volume will give us a little more indication. Yeah, you were over 2 on the volume. So that's good. I mean, it's a thinly traded stock, but it's acting exceptionally well. And let's just close all this stuff out and zoom in. So how do we trade this now? Well, the answer with this one is relatively simple. We broke 69, which is what you were looking for, pulled back, rallied, formed a base, and broke out. This is the highest close you've ever had on the stock. So really what you're looking for, if you just take this right here and put it right here, you can see where you closed, right? You closed right at the top of that green bar. And this is pretty much the highest close that you've ever had on this stock. I know for this year, but let's take a look back and look at a weekly chart. It's the highest close you've ever had. So, and if you close here on the weekly, it'll be the highest close ever on a weekly chart. So that's a really good sign. And I would expect this to have the potential to push more. So the question is, how do you play this? Well, if you're not afraid of a news event with it, you have to wait for it to break this level, this 92.49 level, and you need to see it on pretty substantial volume. And if it does that, then it's definitely something that you could be interested in and take a look at for a short-term trade. It's kind of hard after a big move like this to say let's build a position in it because it's already moved so much. So SWBI was one that we've been going on over for a little bit. This weekend, let's get rid of this text, and we'll get rid of this text. And we just were looking at these levels. This was obviously resistance, this 23.57 level, and we ran right to it right on Friday. And today we just exploded over it and just kept going. And the move is very substantial, very substantial. And you're seeing a decent move here. Look, 24.28. I mean, this is a major breakout over a hold on, let me just draw that a little better. This is a major breakout over a multi-year base. So this could be setting up to go a lot higher. I would be looking, if this was something I wanted to be in, I would be looking for pullbacks at this point. I can't just run into this up at that level. It's just too much, too fast for me. So I could be using shorter time frame charts like 15 minutes or 1 hour, but I just can't run right into it. So, but I think that move's going to be around for a while. I mean, Tiger, here we are. I mean, this is what it does, right? It gets you in. It thinks that you have an opportunity. Let me just grab that and throw this over here, TIGR, and then it just falls apart again. I mean, it's like classic. And we had this enormous red down day. We'll get rid of these indicators. We had this enormous red down day. And then ever since then, once you have a red bar like that, you have to work your way back up it. And they don't bounce back right away when you start seeing these. All that selling doesn't go away. So now just drilling into this a little bit as to what would you do with this? Well, you formed an H. And you closed below the H. Here, let me put that over here so you can see it. And I'll move this up for a moment so you can see what I'm talking about. But see how this is a lowercase h? So that's not what you want to see. You have a little rising wedge here. You break that. It forms your H out perfectly. And then you closed at the low. So this is telling you in pretty certain terms that it's planning to go lower. If you look at some of the other little intermediate indicators, you broke that wedge line too. So I would expect this to continue to drop and set your stop levels if you're in this as to what you would use. For me, the drop dead should have been 23.89 on this one. And I'll show you why. I mean, this hold on 1 second. Make sure I have this right. 23.89 is the correct number. Sometimes these lines move. Okay, so we're just going to leave it there, but it's 89. And you can see how you break here. And once you're below that, that's been your watermark. And now you have this. So you have some issues here. So I would not be rushing into this to buy this dip. So U was one that we added to the list. And I like the move today. And let's just go through this on the daily. And just a disclosure, I'm actually in this name. And I like it. I like the breakout. I like the base. I like how we broke out today. And I like how we headed up. And I like the volume. Across the board, I think it was a win-win. And it's a very simple trade at this point. If I take out this breakout bar of the 106.44 and I took out that low, just get out of it. Lose 2 points, move on, wait for it to set up again, and then get back into it. Very simple trade, not something overly complex. So I think this has potential. I think software is the strongest space out there right now. But I think this can get back to 130 fairly quickly as we start just moving up and these moving averages start catching up to us. Let's throw this, let's make sure that they're in there. Perfect. So you can see how you undercut here and then you breaking out. So in other words, we've undercut here and then bounce back. So that signifies that we could have a double bottom in, right? And then you break over this high, which is confirmation that the double bottom is in. Doesn't mean that you're going up, but it does mean that the bottom is most likely in the stock at this point. As soon as you close above the recent peak. And the peak, it's got to be the first peak to the left for that to be a confirmation move. UPST, I'm just going to cover really quickly. I know people that are in it. I understand why you're in it. This chart is not something that you want to be a party to. So let's get rid of this and let's get rid of all these lines for a moment. Okay, here's my down bar. Okay, I failed to rally. I undercut. I completed the move. And now what am I doing? So I'm actually in a bear flag, and this is forming an H. So you need to be really careful here because this to me is setting up to break. If this bear flag can't get over, right? And that was the level that I was using describing it. If you can't get over this 134 level, you have issues. And this is clearly telling you that when we throw these lines back in and you look at these levels that, we understand this 120 is a number. So we could base here for a while, but until I get through 134.82, I have no interest in anything here except a day trade on when, if and when it sells down. And the fact of how it's riding that 50-day has me concerned. So just keep that in mind. This is not something that I'm looking at rushing into. I would argue that you should be looking at the other side of it. Vici, I wanted to cover this because this is going to be pretty interesting. This is going to mimic, and this was one of the indexes I talked about this weekend. It's going to mimic the real estate sector for the S&P. So just keep that in mind. But what you're seeing here is exactly that. You broke down, you rallied, you tried to get over, and now you hit the 50-day. What do you do with it? Well, this is usually where you buy it when it's at the 50-day. The question is this time going to be different? And you really don't know that. So this is a slow mover and it just grinds higher. But really what you would do is it's a very simple trade. That low is 32.25, right? This low, 31.25. This low, see where I'm going with this? So like what is your reasoning to not be in this for 75 cents if you want to be in it? It doesn't make any sense. You can easily be in this for 31.20. There's no reason. That's the level, right? Because then a close below 31.20 gets you a close below the 50-day and gets you a lower low. Well, you've never had a lower low that then reversed on this pattern. You've never really had that, have you? Right here, once you broke it, you bounce back. So again, stocks have personalities, and this is a slow mover, but it's a REIT, and it probably pays a really decent dividend, and people are going to want to buy it, and they're waiting for it to get to that level. So Wish, it's interesting, and I did miss Torch, so I'm going to go over that one as well. We're going to get rid of these fib levels for right now and just focus on this. So this is one we played around with all day today, and look at the volume. I'm going to get rid of all these levels. Okay. And we'll get rid of all this. Okay. So this volume was exactly what we were looking for. And I believe this was in the top 10, but look at this, right? So you were setting up right here with that little wick today. And let's just put that in so you can see what I'm talking about. Okay. So you were setting up right here and we were looking for that 12-10 break and we got it. And we broke from that level and then we just pushed straight up. And look at the volume that came in. Like, this is not going to go away. I think after hours, we're actually still up. Yeah, it's still going. So I don't see any reason that this is going to have an issue. I think you're going to get to this level fairly quickly, if not tomorrow. It looks great. For me, when it moves like this, for me, it's more of a day trade than trying to stay in it. I don't like the risk of these overnight because they tend to issue secondaries and do wonky things when the stock gets moving. So I tend to be very short term at these kinds of moves. But this is doing exceptionally well, and it's been around for a while and could continue to move. I would not, if you look at this on just on a weekly, hold on one second just so you can understand this. This is a new issue. It's not been out that long. So it can move. I mean, it could, have shaken everybody out and really regain its footing. And this could be a monster winner for people. We have not been above the 50-day moving average until today. Today's the first day you're above the 50-day moving average since the 50-day moving average came out. So that's not something to not pay attention to. And I would argue that, we're going to look for this to get through 15 and then continue. And for me, it's going to be much shorter term trades until this develops. But when you're coming off a long drop like this, you really need to pay attention to it because it can reverse fairly quickly. With volume like this that's coming in, I think we're going to continue. Another one that we were looking at today was this. And it just exploded. Let me get rid of these fib levels. I have levels everywhere. I'll get rid of all the horizontal lines, and we'll get rid of all the fib levels. So this just absolutely exploded. We were watching this line, and I was really looking for this break. And it was not something that you could run right into off the open, right? You opened at 9, you pulled back down during the day to 8. It looked like we were going to gap fill, and then it stopped, and then we ran, and I believe it's up after hours. Yep. It's rocking and rolling after hours. So this can continue to move. This is a lot of volume. This is not a small amount of volume. You're starting to talk today about 300, 400 million shares. Okay. You're $10 stock. You're talking about real money. You're talking about billions of dollars. So that's not a stock that's being manipulated by a couple people. That's real buying that's stepping in there and that you need to pay attention to. But we were trading it off of, here, let me show you this pattern and what I was doing with it. So this was fairly quick for me. All I was doing with this was this pattern right here. Let me just turn that off real quick. So what I was looking for was right here, this 966 level. And when I got through that, it just ran up and exploded to the upside. And then I was able to, get out of the trade and just take that quick turn, and then it broke, and that was it. So I was actually selling into this today, and then I just gave it a little wedge on the other part that I hung on to here. So it was a simple trade. I think I maybe made $1 all around on it, but captured that. But I didn't want to stay in case this did happen, and my concern was that it could come back down to this level. So that's it. As always, please do me a favor and click the like button. The more likes that I get, the more people I get in front of. And my goal is to get in front of as many people as possible to show them what it takes to be truly successful.